Join us on Classic FM for a refreshing conversation on building, managing, and preserving wealth the smart way. From practical financial insights to expert perspectives that help you plan for today and secure tomorrow. This is a show that puts your financial future first. Tune in every Monday from 5:30 p.m. to 5:45 p.m. for this insightful wealth management program, because informed decisions lead to lasting wealth. Only on Classic FM 97.3.
A very good evening to you. Welcome to today's edition of Wealth Management and You here on Classic FM 97.3. We are the only station that plays every song you know. Before we get into the show today and tell you what our topic is, let me just share that you can avail yourself of the services of a Skrilla Technologies insurance policy to guide against damage of your small electronic items like mobile phones, tablets, and laptops. Even laptops as well. Just email ask@skrilla.com or log on to the website to get more information. It's www.skrilla.com, and Skrilla is spelled SCRELLA.com. There's a couple of phone numbers. Before I give you those though, let me just share that policies are not transferable, but you can buy vouchers and transfer those to your loved ones. All right, there's also the one account multiple device cover. This means that with just your one account, you can have multiple devices that are under that cover. So if it's something you want to give to perhaps domestic staff or staff in the corporate world, or even your kids, you can have the one account, which means you are in control of what's happening. You can use prepaid premium vouchers for your policy, and in the event of any sort of damage to devices covered by Skrilla, your device will be repaired by visiting the nearest repair vendor. And there are pre-registered repair vendors, qualified professional repair vendors across Nigeria. So whatever neck of the woods you are in, that cover is covered, or your phones are covered, and you're good to go. Phone numbers to reach out to Skrilla are 0916 000 7790 and 0916 000 7791. Here's Skrilla themselves, or as they say, the proverbial horse.
Phone repairs stressing you out? Cracked screens, water damage, the worries endless? Introducing Skrilla, Nigeria's smart choice for mobile phone insurance. With Skrilla, you get instant protection through screen sensitivity testing as well as IMEI verification.
Plans start as low as 5,500 naira for a full year. One account, multiple devices.
No paperwork needed, with Skrilla having partners across Nigeria, so location isn't a barrier, and repairs can be done within an hour nationwide. Whether it's screen damage or back glass replacement, Skrilla has got you covered. Protect your phone and your peace of mind. Visit www.skrilla.com or call the numbers 091 6000 7790 or 091 6000 7791. Terms and conditions apply. Skrilla, preserving perfection.
Welcome again. This is Wealth Management and You here on Classic FM 97.3. On today's show, our topic is how to invest in stocks. Let's first say good evening and hello, Raphael, our co-host on the show.
Hi, Chico. How you doing?
I'm doing great. Our guest today is Vwede Edah, who's the Managing Director, ARM Securities. I should have asked for the... You're smiling, I've slaughtered you.
I was giggling, yeah. But you were close. Vwede Edah.
Vwede Edah. Managing Director, ARM Securities. Forgive me and welcome to the show.
Thank you for having me.
Okay, how to invest in stocks. We've all heard about it. You need to have been living under a rock if you don't know. There's stocks out there. If you haven't heard stocks, we have heard stock exchange, and it's related. So people use that word. Shares, equities, interchangeable, and all of that. Let's start with what stocks actually are, and then move on to what the difference is in stocks, shares, equities.
I think it's a good way to start.
Yes.
Yeah, so I think stocks, shares, equities, they kind of all mean the same thing. It's just basically the context. So you buy the shares of a company, you become a shareholder.
Okay.
But then if you say a stock, it means the same thing. They all mean ownership, right? Beneficial ownership in a company. But you can use it in different contexts. So for example, the American way, you can say, oh, I own stock in this company. You can say, oh, I'm a shareholder of this company. I bought shares in this company. And then I think
ownership.
Equities, fractional ownership is also there. And I think equities is just like the broader term to say, okay, the equity holders are the ones that are, shareholders, of the company. So it's essentially beneficial ownership one way or another in a company.
In other words, each of them is beneficial ownership.
Yeah.
Part ownership.
Part,
Ownership.
no full ownership for either of them. Yes.
You're not the only owner, so
Yes.
you are one of the shareholders.
I see. So how does investing in stocks work? Because we all hear this thing. Oh, Dangote is selling. Blah, 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 and people are rushing, or this bank is selling shares, and blah, blah, you've got
I think we even need to talk about that Dangote IPO.
Okay.
But let's even understand how it works.
So how does that work? Investing in stocks.
So it's pretty straightforward, and now we even have technology that makes it so easy. You can literally pick up your phone and buy shares in a company of your choice. So essentially, the first step is to open a stockbroking or a trading account with an investment house. When you do that, they create a CSCS account for you, which is basically where those stocks will be kept electronically. So if they're kept in a CSCS account, you can easily trade them, buy, sell. And basically, once you have that CSS account, you log into your app or you contact your broker. Brokers are the intermediaries between you and the markets.
Yes.
The markets is where all the companies list their shares. So you contact your broker or you log into your app if your broker has given you that direct access. And then you select the company you're looking to invest in. And it's as simple as that. But I would say is you're buying, like I said, ownership in a company. So essentially you're buying what you believe the future value of the company could be. So it's very important that you do your research, you also do your research on the company and also do some form of relative valuation.
Yeah.
So
let's take a very short break and we'll come back and continue with wealth management, and you stay close.
Your money should work
Your
as hard
level
as you
is
do.
way too low because
Join
you're
us
off the
on
microphone.
Classic FM
You need to
for
pause
a
that.
refreshing conversation
let's-
on managing and preserving wealth the smart way. From practical financial insights to expert perspectives that help you plan for
No,
today
you don't need
and
to, but just
secure
stop that.
tomorrow. This is a show that puts your financial future first. Tune in every Monday from 5:30 p.m. to 5:45 p.m. for this insightful wealth management program, because informed decisions lead to lasting wealth. Only on Classic FM 97.3.
Welcome back. It's Wealth Management and You here on Classic FM 97.3, where we are discussing how to invest in stocks. Just before we went on the break, Raphael, you were about to ask a question.
yes, whether you mentioned research and trying to work out some relative valuation. So I was going to ask you that, what do we look out for in making that decision that this is the right stock to invest in or this is the right shares to buy?
Okay, so I think firstly, before you even start investing, there are necessary questions you need to ask yourself, right? You need to understand your capacity, right? You need to understand how long you want to invest for, and capacity varies. I would say that a 50-year-old retiree and a 30-year-old, active salary earner have different, risk capacity and also risk appetite. But at the same time, you can be 30 years old, you can be in debt, you can be a low income earner, and a retiree has more capacity than you because retirement funds, children already making money. So basically, first step is to look within what is my capacity, what's my risk appetite. Then after that, you can now look into the company. So I will start with the earnings quality. So a company can be making money, but what's the quality of what they're making? Are they a manufacturing firm, and then the income they earn, or what is contributing heavily to their profit is maybe interest income or income from investing in other businesses rather than cost of actual goods sold? You have to look at the quality of those earnings. You also have to look at the cash. Those earnings, are they paper or is it cash? Is it paper? So apart from that, you can now do the relative valuation that I spoke about, which is there's a price in the market because you're going to buy it, right? And you now have to compare that price to the prices of other companies. So there are metrics that you use in that price, because the price is essentially the value you are seeing in the market. So how I do that comparison, or how you will do that comparison, is this is the price compared to the earnings, price to earnings ratio. Or in case of a bank that has a lot of book value assets, you say this is the price compared to the book value of assets that the bank has. So if I do that and the price is attractive compared to the earnings, I can say, okay, this price is undervalued, right? These are the earnings, the price should be way higher. So it's good if I buy now, because I know that the company has capacity to even do way better than I'm saying now. So it's undervalued. So I buy when it's undervalued. If I say that this stock is too expensive, the earnings are not as good, the quality of the earnings is low, I can decide that, if I'm holding it, let me sell now because the market is overpricing this. So it's very necessary for you to look, inward at your own capacity. It's necessary for you to look at the earnings quality, the balance sheet of the business, and then also now look at the pricing compared to peers, that's other companies within the same, bank to bank, consumer goods to consumer goods, and then you can now look at the price if it's attractive enough for you to buy.
Okay, so at what point does sentiment come in? I hear people say it's just sentiment.
So people have expectations. So for example, there are some companies that move in line with each other, and how I'll explain is, if something positive is happening in a banking stock, people expect that, if this tier 1 bank is doing this, the other tier 1 banks should follow suit. So you will see sometimes that when a tier 1 bank like GT is appreciating, people expect that Zenith, should be at a level close to what GT is, and then that sentiment, is factored into the price of Zenith as well. People also have, sentiments based on companies that pay dividends, don't pay dividends, and they have negative sentiments. Obviously, it's the companies that don't pay a lot of dividends versus the ones that pay dividends. So that's also something that, especially different markets, different consumer behavior, different market participants' behavior. So you also have to look at what the market sentiment is.
Okay. Interesting. Okay. Let's talk tax. Are they taxable? How do people in this area, how do they manage tax?
Okay. So, before you even invest, right, it's very important you ask your broker for like the full service costs, because there will be brokerage fees, there will be fees you pay to the SEC, to NGX, to CSPS. There will be, VAT on those fees. But beyond that, as an investor, when you are filing your taxes, you are, there's a capital gains tax that you're expected to pay on gains you've made in the stock market. Now, the capital gains tax, there can be relief for some types of investors. So if I'm a retail investor and the sum of all the profits I've made in 12 months, January to December, isn't up to 150 million, I don't have to pay tax. So the tax is not to, for the retail investors, they want you to participate more, but there's capital gains tax as well to be paid. Then there's also the relief of reinvesting my sales proceeds. I've made 100 million, 150 million, and then I use it to buy more stocks in the markets. I'm not going to pay tax on those gains because I've reinvested it in the markets. So it's very important that you speak to your broker to just understand your complete portfolio valuation and the gains you've made, and then also understand how much tax you are supposed to pay.
Interesting. Presumably there are different types of shares. Yes. What are they? Run us through them.
Okay, so there are the ordinary shares, which is what we're talking about now, going on the stock market and buying, ownership in.
I'm really curious about this because you see it written down. Ordinary shares. What are the extraordinary shares then? Is there anything called extraordinary shares?
So there are preference shares,
Okay.
preferred shares.
Yes.
And I think the key difference between ordinary shares and preference shares would be, the structure. So for preferred shares, right, there is a fixed dividend I'm expecting at a particular period.
Okay.
It's kind of like, an in-between between a bond and a stock, because it's a share, it's preference shares, but I'm guaranteed a fixed return, at a certain period. For ordinary shareholders, of course, it depends on, the amount of cash the company has. If they decide to declare dividends, if they declare the dividend, is it approved at their AGM, their general meeting, and then they pay ordinary shareholders. But for preference shares, you have that fixed. There's also a seniority ahead of ordinary shareholders. So, of course, if you're a shareholder, you're buying ownership in the business. So even if you're starting your business and, God forbid, your business crashes and it becomes nothing, it becomes nothing. So that's the risk you're taking. So it's the same mentality you should put in investing in the stock market. You're a shareholder, you're an owner. If anything happens and the business, crumbles, essentially, your investment there also crumbles. But again, the business can pick up, your returns can be 2 times, 3 times more than it was a
year. So you can't take out any sort of insurance.
No. You can have personal insurance that you say, okay, if my losses, I have a stop loss limit. There are like risk management tools you can, personally put in place. Okay. But essentially, no. The only insurance given to investors are where there are fraudulent activities. Okay. And then there's an investor protection fund. Yes. So in that way, the investors are protected up to a certain amount. So there's that at least.
Go ahead. No, go ahead.
The Nigerian Stock Exchange. Let's switch to that and talk a little bit. So the Nigerian Stock Exchange have sort of performed well. I don't know if it's extremely well, but has sort of performed well, right?
It was in the news.
Are there drivers, that you would like to share just for people to further broaden their knowledge on learning about stocks?
Yes, definitely. The market has performed exceptionally well. Half year alone was up 46%. Year to date is close to 60%. That is year to date returns. But this 60% doesn't mean that everybody that has invested in the stock market, they are up 60%. And this is where stock selection comes in. So the industrial goods sector, the banking sector, they've posted impressive earnings. Banking sector, some players in the banking sector paid record dividends. So those companies have performed exceptionally well. The stock prices have moved in line with their performance. They've also been, some policies that have been put in place that kind of drove investor activity. Exactly. And then that activity, of course, means there's more demand. More demand means higher prices. So all those have contributed to the positive performance. I would say as an investor, going in, it's very important that you have a long-term horizon. right? So while yes, the market performance has been exceptionally good. I think we were number 2 as at half year. Only South Korea was performed.
That's correct.
Performed better. So I would say that you need to be careful in stock selection, and what is very important is that you diversify. So I was saying industrial goods did well, banking sector, but insurance performance year to date is negative. So you need to imagine I'm an investor and the 4 stocks I have in my portfolio are all insurance companies. I'll be wondering which 60% are these scammers talking about. Me, I've lost all my money.
That's what you hear was like gambling.
That's what you hear was like gambling, but no, it's you're buying ownership in a company. And imagine if you could own different businesses so that when one sector is not doing well, the other one is helping you, pay the bills, quote unquote, you understand? So it's very good to diversify, and that way you are protected. Diversify and have a long-term horizon.
Okay, makes sense.
Okay, staying with the stock exchange, are there any key events that have happened in the Nigerian stock market recently?
Well, yes. I mean, I spoke on some key events. There was last year. There was the mandate for banks to recapitalize. We saw most of the proceeds of the recapitalization lead to higher banking earnings. There are also different primary market transactions that have come into the market. Companies for the recapitalizations. Companies have had rights issues, which is basically shareholders of the company have the right to buy more shares at attractive prices. There are also pending transactions potentially coming into the market once they receive approval from the SEC, and that has really been driving up anticipation. So a lot of people are waiting for some of those offers.
And the pension fund administrator as well.
Yes,
I think that's another.
So that increased the demand I was talking about earlier, because earlier in Q1 the amount of the percentage of the pension funds that could be invested in the equities market was increased. So the first thing that came to investors' mind is what fundamentally sound stocks would these pension fund administrators buy, because they are going to have to buy more. They have funds, they have to invest the funds, they have a policy for that. That drove demand as well, and we saw a lot of demand in there.
There's also this gist on the streets now that the Dangote refinery IPO is also going to sort of have some positive impact on the markets when it's launched.
It will be some kind of game changer.
Yes.
Is that something you also want to just share very quickly?
Yeah, so I said pending SEC approval. So there's a process for these listings, and currently the approval is with the SEC pending go ahead, right? And yes, there's been a lot of speculation on how the dividends will be paid, when it will be open, when it's closed. I think I would first say that it's very important. It's not I don't think it's a life-changing bet kind of money that you should put in the Dangote refinery. Is it potentially an attractive offer? Definitely. And we already have some listed companies, some Dangote listed companies on the exchange, but they are different, right? For, let me say, Dangote Cement, for example, is priced in Nigeria. And it's a different industry entirely. But this Dangote refinery, the prices are majorly going to be determined by crude and maybe other petroleum, other products, right? And is more internationally determined. So there are global factors that affect the prices. So you can't really, it's not really apples for apples just because it's the same name behind it. But is the offer potentially attractive? Definitely.
Okay.
As we wind down, I think it's only fair if we ask if you have any stock picks.
Only fair, right? But
yes.
I think I don't want to disappoint you, and the reason why I say that is because I don't know your circumstances, and I don't know the circumstances of the listener. So it's always very important that you have a one-on-one conversation with your investment advisor or your broker, because that person is going to understand how to pick stocks for you based on your global portfolio value. of course, there are attractive stocks in the market that have performed well and are in good sectors that have policies that are very attractive, right? In the agri, in banking, but I would say, generally, these are just fundamentally sound stocks, and you should still speak to your broker before investing. So if I'm just to pick three, and these are not stock recommendations,
okay,
right? It's just to be very clear, they're not stock recommendations, right? I would say a GT Bank, I would say Presco and MTN. Again, I've picked three from different sectors because diversifying is very important, and these companies have also had historically, impressive earnings. They've had their ups and downs, but they are fundamentally sound in that you are looking at different things: earnings quality, corporate governance, the balance sheets of these companies, as well as the sector, economics, what policies are driving them. So, but please speak to your investment advisor before investing in any stock.
Feel free to leave your contact details for those that might be interested in talking to you about what stocks to invest in.
Definitely. I mentioned things are easier now because there's technology. So once you download ARM1 app, for example, you have access to stock recommendations, and you also have access to contact us to get specific or more details on those stock recommendations.
Okay, so they'll see the contact details on the app.
Yes, on the app they can contact us. They can chat with us on the app.
Alrighty.
Fantastic stuff. And I'm sure that I know that I won't hesitate when it comes to the Dangote one. I mean, I'm trying to be. I'm eagerly anticipating it, and I think it will be some kind of rush.
Yeah.
Yes.
That's what's going to happen. That does it on today's show, where our topic has been how to invest in stocks, and we hope that you found it as useful as I have. As always, repeat editions of the show are available.
Yes, on our YouTube channel, Wealth Management and You. And do well to subscribe as well so that you can get prompts on new videos every week. I don't know if Vwede picked a song at the beginning.
Yes, that's what I was about to ask. We have a classic tradition here.
A classic song.
Yes.
Oh my God.
Chico can help you.
I'm always here to help.
Is this a classic song? Tony Braxton. Spanish guitar.
Oh, wow. It is a classic song.
It is.
First song that came to my head, please. No reason.
Okay. This has been Wealth Management and You. It comes your way at 5:30 every Monday on Classic FM 97.3. So please do join us next Monday for another edition of the show. Thank you so much for joining us, Vwede.
Thank you again for having me. It's a pleasure.